Company-wise, we have a pretty quiet week coming up, and the headlines are likely to be dominated by the European Central Bank's latest monetary policy meeting on Thursday the 7th of September. Nobody's expecting President Mario Draghi to announce a change to the main interest rate, which has been held at precisely zero since March 2016, as we can see here. Instead, investors are going to focus on the ECB's quantitative easing scheme. This is running at €60 billion a month, having been cut from 80 billion in April, and is due to run until December. Mr. Draghi has said it could remain in place beyond that date if necessary, but with the EU's economy doing generally better than expected, some analysts are wondering whether the ECB could signal a further reduction in QE or confirm that it will stop adding to the stimulus altogether at some stage soon. However, such talk means the euro is already trading at a 2.5-year high against the dollar. Such currency strength could hobble both the eurozone's upturn and its stock markets. Note how the Stoxx Europe 600 index has sagged of late as the euro has surged. As such, Mr. Draghi may move slowly and perhaps postpone any tricky decisions to the next meeting on 26th of October at the earliest, especially as inflation is still running well below the target of 2%. If Draghi does call a halt to QE, this could be a test of whether the Eurozone economy and its stock and bond markets are able to stand on their own 2 feet, especially as the US Federal Reserve is preparing to start withdrawing QE, having stopped adding to it in 2014. Bottom up, there are precious few company reports scheduled, with laundry and dry cleaning and facilities expert Johnson Service set to release interim figures on Monday the 4th of September, and building and engineering products firm Alamask slated to publish full-year numbers on the 5th. But one more firm well worth noting is investment property company A J Mucklow. The Real Estate Investment Trust, or REIT, will release full-year results on Tuesday the 5th. Mucklow has a market capitalisation of around £300 million, and the Halesowen headquartered firm bills itself as the largest quoted property investment company in the Midlands. It's an expert in industrial, retail and office sites, with industrial representing 2/3 of the assets. As we can see here, the shares have advanced smartly over the past year, although they have started to sag just a little of late, and the 4 key figures that will help to set the future trend are as follows. First, the vacancy rate. This was just 4.1% at the first half stage, and 3.2% a year ago. Second, the increase in average rents on new lettings and lease renewals. This was a very healthy 10% in the first half. Third, capital values. These remained broadly stable in the first half, leaving the assets valued at some £374 million. That equated to a net asset value, or NAV, per share of 448 pence, which compares to the share price as I sit here of around 480 pence. Mucklow therefore trades at a premium to historic NAV. This probably reflects its business and geographic mix, as our next graphic suggests, which looks at premium and discounts to historic NAV across all of the leading property stocks. Industrial, warehousing and regional plays command premium or limited discounts, whereas the big city development and financial services names like Land Securities and British Land trade at whopping discounts, as does the heavily retail exposed Into. The final number to watch is the dividend. A J Mucklow has increased its dividend every year since 2009, when it left it unchanged, and the consensus forecast is for an increase in a full-year payment to around 22.1 pence a share, compared to 21.47 pence a year ago. That equates to a yield of just over 4.5%. Thank you very much for watching, and I look forward to seeing you next time.